Hello again and welcome to Money Talks with me, George Pitcher, and Edmund Shing. Welcome, Edmund.
Thank you,
Edmund
George.
Shing of the Idle Investor website and the Idle Investor book, indeed, The Thinking Person's Investor. Welcome, Ed. Ed, now you've written your column this week for ibtimes.co.uk on China and the market in China. Now, even I know that China has taken the most dreadful bath in terms of market prices over the last fortnight. So it's all over in China, isn't it? The bubble's burst.
Well, I wouldn't say that. I mean, certainly it looks like a bubble. If you look at the Shanghai Composite Index, which is the main index for China, George, you will have seen that it has more than doubled in the last year. And then suddenly over the last 2 weeks, it's lost over 22%. So you're thinking, okay, massive run up, massive crash. Do I really want to be anywhere near this? I would say, yes, you do. There are still good reasons to invest in China today.
So despite that incredible rise in the Chinese market value, and the fall, the 22% fall, or over 20% fall in Chinese prices, you don't think it's going to continue to head south? Because, you know, it depends how overinflated we thought it was in the first place, doesn't it?
You're absolutely right, George. And you know, with any bubble and with any bust, you can never call the top, you can never call the bottom, because frankly, even the most experienced investors do not really know. We cannot fine-tune our timing in the market that well. But what I would say to you is that there were very good fundamental reasons why the market went up, and I think there are very good fundamental reasons why in the long term the market will continue to go up. For instance, one simple point. Everyone goes on about Chinese economic growth slowing. You know what, George? It's still running at 7% growth per year. Okay. We would kill for that in the Western world. The US is under 3, UK is about 2, and Eurozone's at 1.
But this sounds like it might be for the more experienced investor who can wait out perhaps a little trough in the Chinese market, or not? Or retail investors, your average investor, is it a place for them?
I think it's a great place for the average investor to invest via funds.
Oh, okay.
Not individual stocks necessarily, but via funds, because I do think this is still one of the great growth opportunities of the next 5 years. So, I mean, yes, it's not necessarily for next week, just a week after. You know, you've got to have maybe a 1, 2, 3 year horizon.
Where are those funds to be found?
Well, the best place I find in the UK at the moment are in investment trusts, which are listed funds.
Right.
One is called the Fidelity China Special Situations Trust, run by a very big company, Fidelity, who have a fund manager based in Hong Kong on the ground looking at these companies. Very successful fund, up 60% over the last year, but currently trades at a discount of 17% to its net asset value. So that means if you buy this fund, you're effectively, for every 83 pence you're spending to buy the shares, you're buying £1 of Chinese assets.
Right, I see. And now what about companies themselves that one might look at investing in China, or indeed with exposure to China?
Well, I mean, if you're thinking about UK-listed companies, I think there are 2 areas to look at. One would be booze. The other one would be luxury goods, clothing and accessories. On the booze side, I would say Diageo has the biggest exposure.
Right.
You know, Johnny Walker, Black Label, for instance. Black Label, the really ultra-premium stuff in Scotch and cognac works really, really well. Smirnoff vodka and all of that all works well with the Chinese.
Right.
So that could be one area.
It's treating people in China with strong nerves, I imagine. I mean, they probably need a tot, don't they?
Well, you know, one thing you have to realise about Chinese people, George, they like showing off. And one way to show off is with a Rolex watch, or Johnny Walker Black Label, or Cognac XO. I mean, the really super expensive stuff.
And clothes.
And clothes. Clothes and leatherware accessories like bags. The ideal, I think, play in the UK, and that would be Burberry.
Right.
Because it's a classic British name, works very, very well with Asian clients, and again, has really rather large exposure to China.
Very good. Thank you very much, Ed. So we needn't be too bearish about the Chinese market. In fact, Ed, you know what's going to happen now, Ed, don't you? Ed is a bull in a china shop. See what I did there? Anyway, so opportunities in China, booze, luxury goods, or let the experts do it through an investment trust. Thank you very much indeed, Ed, for your wisdom this week, and thank you all for watching Money Talks.